Hey guys, it's JP Invests, and today we're going to be talking about crypto. I know it's a little bit different than our normal assets that we're talking about, which is like growth, dividends, value, ETFs, bonds, and some real estate in there. But today we're going to be talking about crypto. And mainly just the main two that I own is Bitcoin and Ethereum. And I want to go through my bull case for Bitcoin, and kind of Ethereum is going to follow behind Bitcoin's path that it makes. So currently Bitcoin is at $35,415, and recently it has hit a high, I think around 38, about 37,800. And if you looked at my portfolio, I don't have that much in there. Just kind of doing more of a speculative play in the crypto space. So I have, I think, 400 in here and about 100 in Ethereum. Which, if Ethereum crashes, I'm planning on putting a bit more in there. But for my Bitcoin, I think I'm just going to leave it what I have, unless it does crash a good bit. But if you look, I have an average cost of $26,271, and I just have a very small amount for my whole portfolio, but a small exposure. If it grows to like $100,000, I'm still going to be able to get some pretty good gains, where if it goes to $100,000, I should be able to 2x my money from there. So that'll turn 300 into, I think, 1,800 or something like that. But whatever, it'll turn into a pretty good return. So the thing with Bitcoin is every 4 years there's a Bitcoin halvening. And originally it was 50 Bitcoin per 10 minutes per block. So, and that gets cut in half every halvening. So it was 25, then 12 and a half, and now it's going to be 6.5, 6.25 is what's going to be the new every 10-minute halvening rate. What this does is it pushes up the price of Bitcoin. I'm not sure if you guys know how Bitcoin really works. I can go have a more in-depth video. But on the surface level, Bitcoin works because a ton of people's computers are running a similar algorithm that are communicating with each other and validating transactions, and that's through the ledger and everything like that. These computers get paid for their amount of work and how many equations they can do. So the more equations they do, the more money they get per the block. So the electricity cost that goes into mining the Bitcoin doesn't change, but the amount of Bitcoin that they're getting does. So inherently, the price of Bitcoin is going to have to go up to pay for the price of electricity. So what these Bitcoin miners will do, they'll stop selling once they know a halvening's coming, because they want to hold on to it, because they know the price is going to go up, because they're going to get paid less Bitcoin in the future for the same amount of work. So they're going to hold on to it, and then they're going to sell it into the future. So that's why a lot of these proxy plays like Riot and stuff like that, they go up and down with Bitcoin because they hold a lot of Bitcoin and they're mining a lot of the Bitcoin. Another thing that makes me very bullish on this is there's a spot ETF that's going to get approved by the SEC very, very soon. And we had some rumors of this a couple weeks ago, and it went up. One second, sorry. It went up like crazy. That was right. Where was the jump? I'm not exactly sure where it was, but it jumped up to like 28. Oh, it was right here. So it, I don't know exactly where it was. I don't think it was right there, actually. I think it was maybe right here, and then the market just took off after that. But it was rumored that one got approved, and it jumped like 5 to 6%. That just shows that the cannon is ready to take off. So that is Bitcoin. That is my theory on Bitcoin and why it's going to go up within a year or two. The ETF and the halvening. Those have on average, or not on average, they have pushed it up every time. 2016, 2020, and now we're going into 2024. Looking at Ethereum now, I just want to show you one more thing. I just want to show you this chart. So it pushes up and then down. I don't have a long enough chart on here to show you that the 2016 it did the same thing, but it did. So Ethereum is a very similar thing, and it's going to trace what kind of Bitcoin does, but I think it's just a good play because it could multiply your returns just because of the smaller market cap, and it's actually more usable. Bitcoin's more of a store of value. The transaction rates aren't as fast. Ethereum is very fast, and it also can have a lot of programs and stuff put onto it. So I do just have, I do have $187, and I am down $12. So I did put $200 into this. My average cost is $21,115. If you look at the price in the past, the highest it's been is $26.18. But I'm thinking that Bitcoin is going to rally up to $80,000 to $100,000 this next halving. And that means Ethereum's going to have to rally to something around this price or even higher to stay in the same percentage of the amount of the market cap of Bitcoin. So if it's going to grow at the same rate. So that is my overall theory on Ethereum and Bitcoin. I am more bullish on Bitcoin and actually have more reasonings just because of the inherent slowing of the inflation of the coins. It does have a slight inflation, but it does have a capped amount versus Ethereum kind of can vary and change. I'm not so knowledgeable in Ethereum and how that all works because that's proof of stake, and Bitcoin's proof of work, which I understand a lot more because I have mined Bitcoin and mined other cryptocurrencies that have been proof of work, so I understand them a lot more versus proof of stake, which is a little bit different, where you stake your Ethereum and then you get a yield, and that's how it confirms and stuff like that. But I hope you guys enjoyed this short little video on why I'm bullish on Ethereum and Bitcoin. If you guys have any questions, comments, just make sure to hit them down below. But this has been JP Invest, and I hope you guys enjoyed this. Have a great day. Thank you.